Hello and welcome everyone to Gold Asset of the Day for the 10th of March 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we head into a new week here? Well, on Monday, we saw over a 1.7% move to the upside for gold, breaking out to the highest level since December of 2012, where we, of course, saw a significant drop in global stock markets. We saw oil prices drop by over 30%. And of course, we saw significant gaps here on the open. Now, actually, on Tuesday, we've now seen gold pull back over 1%. It initially tapped $1,702 per ounce before then finding support at $1,649. And this is effectively really what we're looking at over the course of this week. Potential for support to keep coming in around that $1,650 per ounce handle and see resistance at 1,700. We're ricocheting between those levels right now. I would look for evidence at that zone of $1,650 to $1,660 per ounce for buying evidence here on gold. If you see that, then of course we can start to build up momentum again back towards the swing highs of 1,700. Now, of course, with that, that's at the 7-year highs. Now, we do have later on this week a major news item which you want to keep on your radar, which is the European Central Bank announcement. So that will be on Thursday. Then next week, we also have a major news item as well, which is going to be the FOMC statement on March the 18th. So, of course, last Tuesday, we saw an emergency rate cut in the afternoon, which propelled gold significantly higher, its biggest one-day move since 2013. We discussed with you last week where we were effectively selling short gold at the beginning of the week, which was certainly working as a sell short. We banked 200 points on that trade, protected the position. We then saw the significant breakout, which we capitalized on by both silver and platinum after we saw that the Federal Reserve had stunned the markets and effectively they'd gone into this interest rate cut, which was not to be anticipated at that point. It wasn't a scheduled news item. This was an emergency rate cut by the Federal Reserve, which of course propelled the metals significantly higher. As I discussed on the week ahead commodity report, it's very important that you're nimble in the markets. If you see a change in the fundamentals, that you're able to react, able to switch position when you need to, protect your trades, protect your profits, and then capitalize on the subsequent moves. So it's been a great week from the standpoint of the precious metals. They gapped on the open, which is in fact exactly what we wanted to see happen. We had 2 positions on platinum, which banked us 620 points, and also 4 positions on silver, which we banked all of those profits off the open. This pullback that I'm seeing right now with the metals on Monday, on Tuesday, as I'm sure you're aware, this is very typical, that counterflow. If we gap up on the open on Monday, often we do roll over, we fill the gap, and then on Tuesday, we start to see support come back in, especially around key levels, which we're seeing right now, around $1,650 per ounce, enabling opportunities to then trade the range. The caveat to that will be, if we were to break below and close below $1,650 per ounce this week, that could then send gold lower and start to make a move back towards the 1,600 magnetic level. On the flip side of that, of course, if we hold 1,650, we're trading above that level right now, then we could start to see a move back towards the swing highs again of 1,700. And of course, if 1,700 was to be taken out, that is what opens the door up to the next major level of resistance at $1,750 per ounce. We've also seen significant moves here on platinum and silver. Off the Sunday open, they've rolled over, they've also filled their gaps on Monday. We're sitting at quite key levels, which I'll talk you through in more detail on Silver Asset of the Day. I'm sure you're aware, but we have seen Donald Trump start to provide some additional sentiment, positive sentiment really to the stock markets by promising a package which will offer stimulus to equities. And with that, we're starting to see equities climb, and also the energies build a bit of support today as well, which is putting a little bit of further pressure on the metals. We've seen a 1% drop so far with gold. Also, what we're seeing right now is the US dollar is starting to stage a bit of a recovery. What we want to observe is whether this will continue to follow through. Right now, of course, coronavirus headline news items are having very negative impact on global stock markets and also energies as well. We continue to see that put pressure. So each time that we are seeing an acceleration in the number of people infected with the coronavirus, the number of deaths, that does tend to have a negative impact on the stock markets and also energy markets. And of course, last week we had OPEC meeting at the end of the week where no resolution was put in place between OPEC and Russia. And as a result, we had that considerable drop on the open, over 1,000-point move lower for crude oil off the back of that. And of course, this provided a great opportunity with the metals, if you'd got in your positions last week, to capitalize on banking on the open, because now we've seen a gap fill and we're back at key levels again. So overall, I'm looking for range bound trade this week. If we can continue to hold above 1650, I would suggest that offers an opportunity for a range bound trade back towards the swing highs. If we do break below 1650, that's where the door could open back towards the next major key level of 1600. But for now, we're holding above 1650. That's providing some good buy opportunities on the lower time frames. And just be mindful, later on in the week, we do have the European Central Bank announcement on Thursday. They are anticipated to cut interest rates, and you saw what happened when the US cut interest rates last week. That tends to be a big catalyst for the precious metals and can provide certainly further support.